Quality is not an act, it is a habit. Aristotle. Intro. There are many different ways to sell an indexed universal life policy. This book will walk you through how to leverage a supplemental life insurance retirement plan by using an indexed universal life insurance policy. This presentation style isn't for beginners and takes practice to master. It's more of a general framework. You're going to need to fill in the details. What I've found is that most consumers appreciate the education. So in this book, you'll find that we focus a lot on education and leverage that time spent by educating a client. We do a needs analysis and create a customized solution, assuming that the client needs a SLRP based on what we find during the qualifying process. Key points we will address. 1. Explaining the landscape of retirement in simple terms. 2. Explaining how an IUL works in simple terms. 3. Explaining gaps in current retirement plans. 4. Explaining how an IUL SLRP can fill in the gaps. What is an indexed universal life insurance policy? An indexed universal life insurance policy gives the policyholder the opportunity to allocate cash value amounts to either a fixed account or an equity index account. Indexed policies offer a variety of popular indexes to choose from, such as the S&P 500 and the NASDAQ 100. Investopedia. In other terms, a client is purchasing a life insurance policy that also has investment components. A more consumer-facing explanation. What happened to the value of the 401k in the stock market in 2008? Trillions of dollars in value were lost in the span of months. Every 10 to 20 years or so, the marketplace of ideas creates a new and more robust form of retirement vehicle or retirement strategy. The market expands, contracts, and then adjusts. History and background. Indexed universal life insurance was offered first by Transamerica in 1997 and is now currently offered by over 34 life insurance companies. The IUL is probably the fastest growing product in the financial services sector and is evolving to meet market needs. The product overall is evolving constantly to meet accumulation concerns and distribution concerns. Each year we see new rate caps, new interest rate locks, different indexes, changing death benefit options, etc. What is a supplemental life insurance retirement plan? A SLRP is an in-addition product to complement an overall retirement plan by filling gaps where traditional retirement plans fall short. A SLRP is not a standalone, one-fits-all retirement solution. It's a great addition to an overall retirement plan. Major upside of a SLRP. 1. Allows high potential rates of return with no potential for loss of gains. 2. Allows for tax-free access of investment returns that have accumulated into cash value via a policy loan. 3. Provides a tax-free life insurance benefit in the event the insured dies prematurely. 4. Can provide long-term care. 5. Can access funds without fear of paying a 10% early withdrawal penalty. Major downside of a SLRP as a standalone retirement solution. 1. Doesn't allow a client to maximize earnings because there is a ceiling on earnings or rate cap. 2. Cost of insurance can increase, diminishing policy gains or requiring the client to increase yearly premiums to maintain earnings stability. Fundamentally, I believe an IUL is not suited for a standalone retirement solution. Don't put all of your eggs into one basket. An IUL SLRP will complement and fill gaps in an existing traditional retirement plan. I'll explain my reasons in the book and how an IUL complements an overall retirement plan and fills a lot of gaps.